So that's leverage. Margins is actually a requirement, right? So FX is usually traded with a relatively small margin requirement of about 1%. Margin is the amount set aside, right? Amount of your capital set aside to keep your trades running, to keep your trades open and running. At 1%, it is usually what they ask for making new trades. At the margin level, the margin level is to make sure that you are not overexposing, that they can protect you, to say that your losses are kept at your deposit amount. Okay, the use margin is obviously the total amount of all margin required from your current open positions. So if you have a massive, big use margin amount, that means you probably have entered too many trades. You're over leveraged, you're over trading, you're using too much margin. A slight move against you could trigger all your trades being closed, your account getting to zero. So pay attention to leverage because it's a double-edged sword. Pay attention to margin because it is setting aside some money to keep your trades open and running. If you have those two figured out, if you have those two in control, a lot of times your trading is going to be safe. Main thing is you have to keep leverage and margin in control, keep your trading safe.